Good afternoon, and thank you so much for joining us today for our webinar that is going to be tracking LatAm's COVID recovery. My name is David Delgado. I'm the Digital Marketing Director for America's Market Intelligence, and I'm going to be serving as the moderator for today's webinar. So before we get started, we'd like to just give you a quick overview as to what to expect today. We're going to have about 50 minutes or so of presentation and then 10 minutes reserved for questions and answers. However, you don't have to wait until the end of the webinar to ask your questions. You can ask your questions at any point in time. The way you do that is in your participant panel, you should be able to see an icon that says Q&A. And if you click on that icon, it is going to give you a window, and you can type your question in that window and just hit enter, and we'll receive it, and then we'll address as many as we can at the end of the webinar. Now, one of the common questions we always get in these webinars is, will the materials be available after? And so I want to answer that up front and say, yes, they will be. What we normally do is within 24 to 48 hours after the webinar, roughly in that time frame, we send to all the registrants the materials, which would include the PowerPoint presentation we're going to be sharing today, as well as the video recording of the webinar. So you definitely will receive that in that time frame. Let's move on here so that we can try to cover the material, which is, I think, the most important part. This is a legal disclaimer. I'm not going to read it, but it basically talks about how our attempts to verify the accuracy of the information and issues with liability. We encourage you to read that at your leisure, and basically that covers that particular aspect. Let's move on now to our introductions of our speakers today. So as we look at those, there on the far left, and then of course we're going to have all our different practice representatives here today. We have John Price leading us off, the Managing Director of AMI, to give us sort of an overview of what's happening in Latin America. He's going to be followed by Lindsay Lear, who directs our payments practice. Then after that, Diego Rodriguez, who directs our logistics practice, is going to talk about the impact of COVID, obviously within the logistics space as well, and the recovery. And then Arthur Deacon is going to talk about energy. And finally, Christophe Leroy, who handles a lot of our projects in the healthcare space, is going to talk about healthcare. So that basically is going to be the lineup for today. Now I'd like to turn the floor over to John Price so we can start with the overview of the region itself. And a little bit first though about AMI, then the overview of the region. John.
Great, thanks Abel, and welcome everyone. Before we begin the presentation, for those of you who are not familiar with AMI, we are a market intelligence and advisory consultancy. We've operated both under the AMI brand and under our previous brand, Info Americas, for a total of 29 years in the region. And we go to market through a series of industry practices, most of which are represented today by distinct practice leaders. On the next slide, you'll see exactly what it is we do for our clients. We basically help our clients, if you boil it down, we help them answer or make important decisions by answering questions that they have. And these are decisions that involve market movements for them. Either it's entering a market, divesting from a market, launching a product, considering extending their brand, perhaps acquiring a company. It may be less strategic, more tactical, like how do I configure my marketing budget this year amongst key markets in the region? And we answer these questions and we help foment these decisions by reaching out to three bases of information and intelligence in the marketplace outside of your company: the customer and potential customers through market research techniques, the competition, both the competition you're aware of as well as local competitors you might be unaware of, as well as illicit competition, which in some segments is very important. And last but not least, we look at the business context, the political, regulatory, and economic environment in which your business venture will operate. And we take that information with our own experience, which is quite deep in several sectors, and we provide our recommendations. So that's how we support our clients. And we use the knowledge that we've collected over the years to help keep people informed through webinars like this. So on the next slide, let's begin with our objective today, which is to provide you some insight as to where Latin America is going in the second half of 2021. For many of you who may be based in North America, Europe, parts of Asia, COVID is definitely coming to an end, and life is returning to normal. People are traveling again. People feel more comfortable. terms of social distancing. But in much of Latin America, what we're finding is that it's a very uneven recovery. When COVID first struck, the whole region fell uniformly, but the resurgence of Latin America, the recovery of Latin America is very uneven. And we're going to help you understand that. First of all, to understand what's driving the recovery, the most important positive factor is that Latin America's two biggest customers, China and the United States, are both experiencing record growth this year for very different reasons, with very different approaches to how they dealt with COVID. But nonetheless, both of them are experiencing strong demand from everything from consumer goods to industrial goods to commodities. Another really important factor is negative real interest rates. And what I mean by that is that the interest rates that are found in Latin America's leading economies that are issued by the central banks is less than the inflation rate. And this causes very cheap capital. And this has been instrumental in preventing thousands of large company and medium company size bankruptcies this year. In fact, Latin America has done a tremendous job over the last 30 years of improving its central bank management and the reserves that it manages and the different measures it can take to mitigate downfall during these economic downturns. This is, for some of us in AMI, our sixth economic downturn that we've witnessed in Latin America. And I would say the central banks in Latin America this time are better prepared than at any time in the past. Another interesting phenomena is the inflow of remittances, which total close to $70 to $80 billion a year, mostly into Mexico, Central America, and the Caribbean countries, and primarily from the United States. And thanks to the opening of several states, particularly in southern US, which were controversial, nonetheless, it allowed the construction sector and hospitality sectors to return to normal. And that allowed working Latin Americans in those states to send money home, such that Latin America was the only region in the world that experienced positive remittance growth in 2020 versus 2019. Now, the greatest tragedy, well, there's two great tragedies really in Latin America as a result of COVID. First is that well over 1 million people have died. Some believe as much as 1.5 million because certain countries are criticized as underreporting. But also close to 40 million Latin Americans slipped into poverty. And most Latin Americans definitely, their income levels dropped. And it has been such an uneven attack on the incomes of Latin Americans that Latin Americans' significant progress in fighting poverty over the last 30 years basically fell back 15 years in just 10 months of lockdowns. 70% of Latin America, 60 to 70% of Latin America work informally, and those people were not able to transfer their work online. Meanwhile, the government workers continue to receive a full salary, most of them working from the comfort of their homes, deciding the policies that dictate the ability to eat of 60% of Latin America. That helps explain and put in context the rancor, the frustration, and the anger felt by so many of the underclass in Latin America. And we've seen that manifested most violently in Colombia, but also politically in Peru, in Chile, and possibly in other countries over the next electoral season. Another source of frustration has been the very uneven management of vaccines, whether it was the efficacy, the types of vaccines that were formed, the nepotism that appears to be visible in some of these programs, and choosing bad vaccines over good ones. And this is having repercussions as well in terms of how voters feel about their incumbent governments. On the next slide, we'd like to demonstrate how this uneven recovery also is probably even more dramatic industry by industry. Now, I think people are well aware of the positive impact that lockdowns have had on shifting consumer behavior and fomenting digital commerce. And my colleagues will be exploring this in greater detail shortly. Mining is also a booming industry right now because of high gold and silver prices on the one hand, and very high copper prices thanks to electric vehicle and infrastructure spending. But overall, the recovery in Latin America will come from exports, as it always does. And typically these are highly price elastic goods. They're either assembled products, natural resources, or outsourced services. And all of these areas are doing well as the currencies have taken a bit of a beating through this economic crisis, and demand has picked up in some of those export markets. For those of you selling to governments, this is going to be a very difficult couple of years because governments spent quite lavishly by Latin American terms in fighting COVID and providing monies to the most needy, especially in Brazil, Chile, and Peru, where they were most effective. But all across the region, governments are suffering a fiscal crisis. And so big infrastructure projects and some of the things that they might buy, whether it's school books, medicine, et cetera, are going to be in short supply. Brick and mortar retail, just as it has suffered, particularly niche retailers in more mature e-commerce markets like the US or China or Europe, we're seeing the same thing happen in Latin America, and many of them will not come back. And then healthcare, which our colleague Christophe Leroy will explore in greater detail, has not done as well as some people would think in a health crisis. And last but not least, education. Latin America has been very slow to reopen its schools. And this is important for two reasons. One is an industry, it has suffered, but more importantly, public education in Latin America is one of the great equalizers and has been one of the great stepping stones for underclass to move up. And being out of school for up to 2 years will have a long-term impact on that upward mobility in the region. Let's move forward. So we took a number of factors into account, including when will these countries read herd immunization taken from Bloomberg analysis, as well as how they're managing central banks, their fiscal health, their ability to continue to issue debt, their export mix that they have and the likelihood of that growing. We took into account all of these factors and we came up with our ranking from left to right of how the countries in the region will fare again in 2021. And some people will be surprised to see Peru so highly ranked given its sudden shift to the left with Castillo as a likely presidential leader for the next 5 years. But political change in Latin America or in any part of the world, it tends to take time before it actually fosters changes in regulations and fosters real change in business outlook. So again, we're looking at the second half of 2021 here. And with that, we will now begin to dive into some of these key industries, and we'll start with digital commerce. I'll hand it over to my colleague, Lindsay Lear, who runs our payments practice.
Thank you, John. Hello, everyone. Good afternoon. Great to be here and great to see many familiar faces. And just a quick reminder for anyone who came in late, missed our first intro, please feel free to ask questions using the toolbar at the bottom. We'll have a Q&A session at the end. So go ahead and feed us your questions. So as we look into digital commerce, John mentioned good, bad, and the ugly, right? And e-commerce is absolutely a patch of the economy that we can consider good, bright and shining, very positive. But there are some caveats and we need to understand what we're really looking at when we think about e-commerce. The big question that everyone started to ask themselves as e-commerce ramped up during the pandemic is, will these changes be long lasting? And now 18 months, 6 months into 2021, looking at the data, both survey data and looking at transactional data from market players, we can confirm that this change in a large way is permanent and will continue to ramp up over the next few years. What we see on this graph here is the percent of retail e-commerce as a percent of total retail, which is a good general proxy used globally to understand the maturity and penetration of e-commerce in the overall economy. So in 2019, we could see that the average for the region was around 6%, quite low with a lot of runway for growth. Look at how much it increased in 2020, more than doubling in some markets like Chile, as well as Peru. And we can see that it will continue to increase its penetration into 2024, accelerating most notably in Brazil. And this is interesting because Brazil is already the most mature e-commerce market. However, we expect Brazilian retailers are the most sophisticated and most able right now to push into fringe areas of e-commerce and physical products by leveraging new channels, for example, selling over WhatsApp, selling over social media, and leveraging their websites to function as marketplaces, inviting third-party sellers to sell on their platform. So companies like companies that operate as retailers and as marketplaces like Magazine Luiza, now Falabella, Walmart. This is a trend that we're seeing in which major retailers are opening up their platform to encourage new e-commerce sellers, which will continue to spur growth going forward. Beyond retail, of course, digital goods excelled in 2020, and we can expect to see that continuing. All of this culminating in an average growth rate of 30% annually through 2024, reaching almost $600 billion, a huge market for us to take advantage of. Other growing segments beyond retail and marketplaces in particular, we can expect digital goods to continue to be extremely relevant. In particular, gaming, we're seeing massive growth, triple-digit growth in gaming in certain months of the year last year, as young people, teenagers and young adults become increasingly banked and increasingly willing to transact online. Gaming, the transactional portion of gaming is going to really come to the forefront, particularly in markets like Brazil, Peru. We're even seeing major gains there. And streaming, of course, was a staple for many of us while in quarantine. We're seeing more international streaming companies move into the region and local offerings becoming more diversified, more available, and more payment methods being available to enable increased access. So an overall very optimistic picture looking forward through the next couple of years for e-commerce. Another trend that we can observe, if we look up to the next slide, is another impact of the pandemic has been pushing fringe industries of digital commerce to the forefront. And if you click one more, it will bring up the graph. There we go. What we saw in 2020, we might have expected venture capital to decline in the region in 2020. But in terms of the number of deals, actually 2020 was a record year. And looking into 2021, we're seeing already record rounds of investment being raised by companies like Nubank and eBanks, local Latin American players who are attracting international investment dollars, continuing to do so at record levels. So we're seeing a bolstering of local fintech and digital commerce companies and fringe areas of the industry being bolstered. So for example, online car sales, online real estate, lending, and even cryptocurrencies are going to be gaining speed and driving, being a real trend that we need to pay attention to in the next couple of years. And many of you may know we host a coffee chat every other Monday to talk about general trends. If you are all interested in discussing any of these trends a little bit more, actually on Monday, we're hosting a coffee chat on cryptocurrencies. So Belle's going to throw that in the chat right there if you'd like to register. It's free and open. We'd love to have your participation as we discuss the evolution of crypto and its impact in the payments industry specifically, and how it might continue to spur on digital commerce and financial inclusion. So that's a real quick look at payments and digital commerce. Very closely related to this is logistics. So I'll turn it over now to Diego to walk us through that section.
Thank you, Lindsay. And as you mentioned, logistics and e-commerce have been booming in Latin America over the past 12 months. And if we move to the next slide, I will focus on some of the opportunities that we see for the next 6 to 12 months. And of course, thanks to e-commerce and as a result of COVID, the region experienced a leap in e-commerce in at least 4 to 5 years. And that has benefited tremendously the logistics sector in Latin America. Some of the interviews that we had with logistics players in the region have shared with us that their revenues from e-commerce operations have soared by 4 times in the last 12 months. And that is because of the strict lockdowns that several governments implemented in Latin America. For instance, Argentina implemented one of the strictest lockdowns, also Peru, Colombia, and that forced for the first time more than 50 million consumers to go online and make purchases. And that has opened up great opportunities for logistics players and has created a new reality. And of course, all of us know about the challenges, but I want to focus on the opportunities. And the first one that we have seen is how logistics and IT spending is becoming a core a strategy for retailers and for companies that are looking to sell online. Before, logistics was a part of the business that was not the focus, and today, logistics is becoming the center for companies that want to merge the online and offline worlds. We have been hearing about the omni-channel strategy, but actually, what we're seeing in Latin America is a faster adoption of those two channels that are, instead of competing each other, are complementing each other. And we're seeing how retailers are using their stores, their physical stores, to accept returns from online orders. Also, customers can place orders online and can go and pick up their goods in their stores. So we're seeing logistics at the center of that strategy. Also, among the fastest growing segments in the logistics segment related to e-commerce are those that offer value-added services. We're seeing how many fulfillment centers, reverse logistics, dark stores, next day delivery is becoming they are becoming the fastest growth segments, because companies are looking to differentiate, are looking to better serve customers, are looking to offer a better customer experience. And logistics players that are focused on those segments are experiencing fast growth. And also the rise of the few, it's a new trend that we're seeing, and SMEs, brands, the social commerce that we expect to see in the next couple of months and years to explode in the region will open up a new source of revenue for logistics players. How to serve those small sellers with completely different needs from the large retailers, from the marketplaces, how at the aggregated level, those customers represent a great opportunity for companies to diversify and to expand in Latin America. That is something that it is very interesting to keep an eye on. And also in terms of the challenges, all of us know about the logistics and the supply chain bottlenecks, the bottlenecks that ports are facing in some of the countries in Colombia, in Argentina, in Colombia. But the most important challenge that we see at the moment is the rise in operational cost, from gasoline to tires to lubricants. That is eating up in terms of the profits that logistics companies are experiencing, not only in Latin America but worldwide. And the second trend, if we move on to the next slide, that we have seen in Latin America is the changing competitive landscape in the logistics sector. This has accelerated as a result of COVID, and some customers are becoming competitors and might become competitors for logistics players. The best example is the rise of in-house logistics capabilities among companies like Mercado Libre, Amazon in Mexico, in Chile, in Brazil as well. The tremendous investments that these companies have been doing during the last 12 months to expand their distribution network, to expand their last mile delivery capabilities, it's might become a threat to logistics companies that were used to handle large volumes from those customers. And that is also going to happen in Latin America faster than you expect. Also, we're seeing how the fast and the cheap, these last mile crowdsourced providers are expanding throughout Latin America. They're going outside their home markets, and they're, for instance, 99 Minutos, a Mexican company, is going and hiring in Colombia. Chask is expanding in Chile and Argentina. All these companies are tapping into this new demand from sellers that are looking to offer customers same day deliveries, next day deliveries at a cheap rate. And that is something that is happening today. This might be an opportunity for logistics companies to partner with these disruptors, or it might become a threat to your business model. And finally, the new competitors that will start popping up in the region as a result of this trend that everyone is looking to leverage the online world to sell. We're seeing a new middleman rising in the landscape. And basically, we find these logistics service aggregators like Envío Click, Mi Envío, Tienda Nube, offering IT support, order fulfillment, parcel courier management to the mom and pop shops that are selling online. And those competitors will start eating up in terms of the profits that the logistics players can get from the e-commerce business. So those trends are worth keep an eye on the next months. And I encourage you to reach out to me if you have any questions, any comments. But I will pass the baton to John again so we can continue the discussion. Thank you so much.
Great, thank you, Diego and Lindsay, for that. We've gotten so much interest in digital commerce and how we can help companies over the last year. It's really tremendous, and it's good to see that the change is permanent in the sense that growth will continue there. If you recall, Lindsay and Diego, we looked at this sector 4 years ago from the point of view of what were the obstacles that were holding back e-commerce. Now, in light of the fact that it's obviously growing, can you tell us, both from payments and logistics point of view, are there still obstacles holding back the sector, and which ones are being removed over the last few years and which ones remain?
That's great. Thanks, John. I can start. Thank you. Thank you very much. So, a couple of years ago, over the past few years, the biggest barrier to e-commerce in the payments arena was access, not having a payment method, people not having a credit or debit card to transact. That was very simply the key barrier. We can safely say that in most markets, for the majority of adults in the region, this barrier has effectively been removed. Today, with the rise of fintechs, wallets, and neobanks offering either a virtual or physical prepaid or debit card that is enabled for e-commerce and enabled for cross-border e-commerce, that you can access without any real qualifications. You don't have to go to a bank. You don't have to show minimum balance. Very easy to access. This barrier has been removed in most cases. What has not really been removed yet is the risk of fraud. And in fact, that's increased. In 2020 was the worst year on record for fraud. And that not only are consumers at risk of losing, of actually having a fraud incident, it erodes trust in the overall sector and the user experience. When I am trying to make a good transaction and it gets declined because of risk configurations that are too strict, I have a poor experience, and that might deter me from using e-commerce again in the future. So this is still an area that needs a lot of work. Banks are working hard to improve this, working with machine learning startups and other types of big data technology to improve their risk models. But this is certainly an area that is still holding back the region in terms of growing even faster over the next several years.
Excellent. Yeah, The Economist did an article this week on cyber crime, and it's certainly, I think, top of mind to anybody who uses a computer. Diego, what about from the logistics point of view? Where are you seeing obstacles still?
Sure, John. In terms of obstacles, the first one that comes to my mind is reverse logistics and returning packages. I just read this morning that in Mexico today, close to 50% of customers are complaining about the return of packages. So that's still a nightmare, either for both customers and for online sellers. That's something that has not improved in the region. In terms of the positive things that have dramatically improved in the last 3 years, shipment reliability and transit times have improved. In Mexico, Brazil, Colombia, Chile, we're seeing 2-day shipping covering most of the main cities. That's something that did not exist, and today is offered to customers. We're seeing same-day delivery, and also the reliability aspect of the delivery has also improved. And today, above 85% of goods are being delivered within the transit times offered to customers. That's according to the interviews that we've had with logistics players in the region. And In the cross-border segment also, we're seeing continued obstacles in the customs procedures, restrictive de minimis thresholds in some of the markets. There's no coordination between Latin American countries to set a common de minimis thresholds, and that basically put a barrier for online sellers trying to penetrate new countries, because the landed cost of a purchase, it is still unclear. But in terms of price transparency and the technology to track packages and the information offered to customers, that has also improved tremendously in the past couple of years.
Excellent. Thank you, Diego. Now we're going to turn to a very different industry, and one that is probably being disrupted more by the virtue that the world was able to pause for a year and take stock of its own development. And certainly in some parts of the world, there is a renewed interest in sustainability and finding cleaner energy sources. So the leader of our energy practice, Arthur Deacon, will walk us through how he sees this playing out in Latin America.
Great. Thank you very much, John. It's a pleasure to be here. So as you mentioned, the impact of COVID in the energy sector in Latin America was not as direct as maybe the impact experienced in some other sectors, such as payments or logistics. What the pandemic did at the end of the day was it allowed citizens to recognize how human action, or human inaction in this case, can lead to big consequences, right? The same is true for climate change. So for the first time in many people's lives, it also showed them what it's like to live in a densely populated urban city, such as São Paulo or Mexico City, without smog or air pollution in your face. So once you get used to this, you don't want it to change. But perhaps even more important than all of that, it allowed major governments and energy companies to rethink the way in which they want to position themselves in this green energy revolution. This was especially the case in Europe and America, not so much yet in Latin America, but the momentum that this created allowed investors to force companies to rethink their sustainability plans moving forward. And this will have a waterfall effect on Latin America. So just within 1 week in May of this past month, there were 3 major decisions involving the largest oil companies in the world. So Shell, Chevron, and Exxon. For Shell, it was a legal decision. A Dutch court ruled that it must reduce its 2019 carbon emissions by 45% by 2030. This is one of the first times that there's a legal precedence forcing private companies to reduce their carbon emissions. For ExxonMobil, there were 3 of its 12 new board members were recommended by an activist hedge fund called Engine Number One. And what this activist hedge fund wants is to limit Exxon's carbon emissions. So they were able to recommend 3 board members that were voted on by shareholders. And lastly, at Chevron, a majority of its shareholders actually voted in favor of a proposal to cut the company's Scope 3 emissions, which includes emissions generated from their products. So it could be me or you using Chevron's oil for our car. So what are the implications in Latin America for all of this? Well, there's several as listed here, but I want to focus briefly on 3 main points. First, it will definitely lead to higher cost of capital and higher credit risk for oil and gas projects as investors shy away from fossil fuel companies. That's going to be very fundamental in the cost of building these fossil fuel projects. Number 2, assets with low operating costs and fast drilling times within regulatory frameworks that are investor friendly will be prioritized. Brazil and Guyana are likely to benefit. Mexico, Venezuela, and Argentina are some of the countries that will suffer with that. And third, heavy industries such as steel making, such as mining, such as cement, will have to accelerate their transition into renewable energy within their manufacturing process, all targeted in reducing emissions, right? So clearly, as is often the case, decisions outside of Latin America end up shaping the region significantly. And that's what we're going to see with these 3 major decisions involving the oil companies. For the chart to the right, the key message is that in terms of necessary clean energy investment, emerging and developing economies are still lagging behind. They account for about 60% of the world's population, a little bit higher than that, but only 20% of investment in clean energy, and just 10% of global financial wealth. So there's a clear, it's not proportional. Annual investments across all parts of the energy sector in developing and emerging markets, so this includes fossil fuels, have fallen by about 20% since 2016. And that's mostly because of political and regulatory challenges in those countries. So to put the world on track for net zero emissions by 2050, investment in clean energy in these emerging and developing economies needs to rise by more than 7 times, so 7-fold increase, topping $1 trillion annually by 2030. That's a huge jump from the 150 billion that was invested in 2020. In Latin America specifically, the increase is a little bit smaller relatively. It's 132% annual growth from 52 billion in 2016 through 2020 to 121 billion annually. This investment will be mostly in end use sectors. So this includes electric vehicle stations, electric vehicle sales, hydrogen refueling stations, retrofitting buildings, and transforming industrial process in general. So for the next slide, if we move ahead, I just want to briefly go through the most attractive energy opportunities in the region among the 6 major markets in Latin America. So before doing that, there's an honorable mention for Guyana and Suriname, which is 2 countries that we have focused a lot of our attention on. They've recently just discovered an abundant amount of offshore oil and gas. In just one oil block in Guyana, there's an estimated 30 trillion cubic feet of gas and 20 billion barrels of recoverable oil. And most of that oil is light sweet crude, which is highly demanded across the world. Of proven reserves in that one single block, there's 9 billion barrels. So that's a huge amount. It also has a $35 break-even cost for oil production, and half the drilling time when compared to other typical deep water explorations. The opportunity is so great that I want to echo something that John has said in the past, which is that it's the best opportunity he has seen in South America in the past 30 years in the energy sector. So going to the 6 markets, Argentina, of course, has a lot of regulatory and political challenges and financial challenges as well. But in the south, the Patagonia region has one of the highest wind energy potentials in the world, with capacity factors that range from 38 to 50%, more or less. In the west, in Vaca Muerta, returns are actually growing pretty substantially as drilling costs decrease and the drilling time also decreases. And this is mostly because of improved technology and also large amount of government subsidies, part of its Plan Gas 4. Vaca Muerta is actually the 2nd largest non-conventional gas shale formation in the world. And only 6% of its land has undergone large-scale development. So it's relatively untapped. For Chile, they're actually seeking to become one of the largest and cheapest producers of green hydrogen in the world. This is because they have one of the best global solar resources located in the Atacama Desert. But they also have to rely on very expensive fuel imports. So they want to transition away from that. And they also have sectors with great hydrogen use cases, such as mining. For electric vehicles, they actually own 11% of the global lithium reserves, but they're missing the technical expertise to manufacture the cathodes. So they have to rely on China for that. But they're one of the few countries that has an EV target, which is 40% by 2040. Mexico, very favorable solar radiation and wind conditions in Baja California and Oaxaca, but they are also undergoing very tough political and regulatory instability. In Peru, decent solar radiation towards the south, but they have insufficient local generation to cope with large mining demands. So it could be a great opportunity to couple those mining projects with renewable energy. It also has very good natural gas reserves that are being pushed forward by the government. Colombia, very good wind resources in the Guajira region. There has been some local community opposition there, but it is a place to explore. And last but not least, in Brazil, very cheap solar power and high demand from heavy industries makes green hydrogen a pretty appealing opportunity in the country. Distributed energy generation is also highly subsidized and making it very highly profitable. So just to wrap it up, I know it was a lot of information. If you're interested in more details, please download our recent deck looking at 5 of the major mega trends in 2022 for the energy sector. Well, we're also releasing a white paper on sustainable energy among large consumers and suppliers in the 6 major Latin American markets. So feel free to shoot me an email if you're interested in receiving either. Thank you very much for your time, and back to you, John.
Thanks so much, Arthur. That was a very comprehensive look at a very complex industry. So appreciate that. I'd like to ask you and Diego to just answer a couple of questions related to this transition and how it's going in Latin America. Arthur, perhaps you could address how energy companies are looking at this and what are some of the challenges they face in transitioning to the green economy. And Diego, you work a lot on our industrial sector projects and have many conversations with industrial leaders. I'd like you to follow up and answer how you see those companies navigating this transition.
Yeah, it's hard to pinpoint one single challenge. I think it's more of a multiple-headed beast. I'll try to focus maybe on 3 top challenges. The first one is China's dominance of the green energy supply chain, and that ranges from the minerals needed to produce some of these electric vehicles and produce solar panels. Just today, the U.S. banned imports of silica coming from the Xinjiang region, where China is using forced labor to produce many of its solar panels. They control 80% of the global solar supply chain, so that can have very big implications for the solar sector throughout the world. So that leaves Western countries very vulnerable to China's geopolitical whims, and that's not a great place you want to find yourself in. Number 2, I think the region still relies very heavily on public sources for financing for clean energy investments. With governments spending so much to combat COVID, their budgets are very strained. So countries really need to focus on creating investor-friendly regulatory frameworks that make private investors, feel comfortable about their returns. In the IEA's climate scenarios, over 70% of clean energy investments will have to come from private sources. And Latin America is actually pretty advanced compared to its peers in emerging economies, but it still has to improve significantly. And the third and perhaps the most damaging or the most challenging aspect is the region's incompetent leaders in many countries and corruption. This tends to have a waterfall effect on all aspects of the economy: the brain drain, less foreign direct investment, regulatory volatility, and just contractual uncertainty. So there are several challenges that the green energy economy still faces.
And to complement Arthur's point, I also think that the region has powerful incentives not to leave behind fossil fuels, with the exception of Chile, Uruguay, and Costa Rica, which don't have oil or gas. The other markets depend heavily on oil to generate tax revenue. And just yesterday, I was reading a study published in the Journal of Energy and Climate Change, saying that between 66 and 80% of Latin America's oil reserves may not be exploitable if the Paris Agreement temperature targets are met. That translates into a drop of tax revenues between 1.5 trillion and $4 trillion. And if we think about the size of the Mexican economy, over $1.5 trillion, we're talking about a fiscal gap that might incentivize governments in Latin America to keep pushing oil out of the ground as long as they can. That's, for me, the biggest challenge that the region faces. And in terms of transition into the green economy, what we have seen is the industrial groups and the private sector is the one actually leading the charge toward a more sustainable energy use in the region. And we have seen a faster adoption of green power alternatives among industrial sectors that use captive energy plants like cement, beverages, food processing. And that's basically stemming from the fact that they're looking to reduce their energy bills. As all of us know, electricity bills in Latin America, in countries like Mexico, in the Caribbean, is very, very expensive, and renewables provide an alternative to cut costs. And we're seeing great examples in the region adopting renewable power sources in their production models. And in Mexico, we're seeing Grupo Modelo, Nestle, Cemex employing these captive energy plants to feed their production processes. And the best example that comes to my mind is Cemex. It's, this is a very interesting argument that we have in the cement industry, and basically it is one of the industries that is blamed for at least 8 to 10% of all CO2 emissions globally. And Cemex is working with a partner to eliminate the CO2 emissions from the production of cement in its operations. And that is going to be a tremendous leap for the cement industry, and especially for the solar panel industry, because what the company is looking to do is basically use solar energy to capture the emissions and transform those CO2 emissions into synthetic fuels. And by the end of the year, Cemex is planning to do a pilot about that specific project. That's something that is emerging from a Latin American based company, and which has operations globally. And that's the best example to showcase that there are plenty of opportunities in the industrial sector among industrial players to go green, instead of what we're seeing from the government side.
That's a great point. Once again, the private sector leads the way in Latin America. No big surprise there. Let's switch gears now and invite Christophe Leroy of Global Health Intelligence, which is an affiliate of AMI, to talk to us about what he's seen in the region healthcare space.
Thanks, John. I appreciate it. It's always a pleasure to be here. For those of you who don't know us, Global Health Intelligence conducts market research focused on healthcare markets using many of the same methodologies as America's Market Intelligence. Today, I'd like to just offer a few perspectives on what's happening in this sector. And to start us off, I was thinking back to your slide that you presented earlier, John, where you were showing what the prognostic was for recovery in different countries based on a number of indicators. The first one of those indicators was the estimated date at which each country would reach herd immunity. And that's not just critical for overall economic recovery, but it's critical for the return to health of the healthcare sector, no pun intended. And in that regard, I'd like to show a few data points to remind ourselves just how big the impact has been. So one way to get a sense of the magnitude is just to look at the official death count. But as you were mentioning earlier, there are various sources that argue that the official death counts are vastly underrepresenting just how big of a death toll there has been as a result of the pandemic. The Economist, among others, is one source that has been trying to estimate the truest extent of the death toll by comparing actual deaths to historic averages for the same time period in prior years, and coming up with a number to estimate the excess amount of deaths attributed to the virus. And if anything, the point here is that this is just one way to show just how stretched the healthcare systems have been, because obviously all of those patients have had to go through hospitals. ICUs have been quite close to the breaking point, and in some countries they've reached that. And so there are a number of implications which Global Health Intelligence is tracking on a month-to-month basis. One way in which we do it is through our Latin American hospital monitoring service. And part of the critical data we look at, among others, is procedure volumes. And so what we've noticed is that as a result of the pandemic over the past 15 months, procedure volumes have dropped dramatically, on average by 40 to 50%. And in some specialty areas, they've dropped by as much as 70%, and they've not yet returned. I'll talk a little bit in a few moments about what we're expecting down the road. Another important implication is that supply chains have been disrupted as a result of the lockdowns. We've talked earlier about how in many Latin American countries, the lockdowns have been a lot stricter than they have been in other regions of the world. One of the consequences has been the disruption of otherwise well-developed supply routes to get medical devices and equipment to hospitals. Where we've noticed the most acute disturbances has been, on the one hand, in critical equipment used to treat COVID patients. So think about personal protective gear, oxygen tanks, ventilators, even body bags. And where the shortages have been most acute has been in rural clinics and in regional hospitals outside of major urban centers. And then finally, a last implication that really stands out for us is that throughout the past year, hospitals have diverted a significant amount of their discretionary budgets to precisely deal with the influx of COVID patients, rearranging ICUs, redirecting staff, and as a result, procedure volumes have dropped, but also what has happened is hospital purchases of medical equipment and products related to those elective surgeries that have been postponed have also dropped. And capital expenditures and investment in high-ticket items have also been postponed. So what can we expect looking forward? Moving to the next slide, I wanted to return here to some of the data around the vaccination drives, which plays in, among others, to these estimated dates by which we expect to see some countries reaching herd immunity. The basic point here is that to the degree that a country is successful in carrying out a quick vaccination drive of a large portion of their adult population will be the determining factor to predict how fast the healthcare system will get back on its feet. So we expect to see a gradual rise of medical devices and equipment purchases by hospitals towards the end of the year and in early 2022. And the operative word here is gradual. In that regard, to be more specific, for those types of products and supplies and equipment that are used in treating COVID patients, those have surged in the past year, and we expect that demand to remain high for the next few months and then to begin to taper off. And that tapering off will happen in lockstep with the extent to which vaccination drives proceed at a good pace. And then the other category is we expect a return to health in those medical devices and equipment used in non-emergency elective surgeries in various different categories as those slowly come back online. And the one caveat I'd like to point out in that regard is that although we expect the return of those procedures to be gradual, one might expect purchases of related equipment to also be gradual. But what may happen is either towards the end of the year or early in 2022, we may actually see a bump in hospital purchases for a simple reason is that they may not just be responding to an expected gradual rise in procedures, but they may also have to restock depleted inventories that they've had to rely on for the past 15 months during the economic lockdowns. So we'll be talking more about this over the course of our own webinar in a couple of weeks. On July 8th, GHI will be co-sponsoring a webinar on some of these trends that we're seeing in the medical equipment and device markets throughout the region. And we'll be happy to share more details about that. So thanks very much for the opportunity, and I look forward to continuing the discussion.
Great, thank you, Christoph, and thank you for demystifying. I think a lot of people had misconceptions about the status of the healthcare sector through this pandemic, and thank you for providing those details. At this point, you've heard from several of our practice leaders and myself, and what we'd like to ask you is, if you are on the next slide, we're gonna launch a poll, and we're gonna ask you if any of you are looking at business decisions, if you're looking at your strategic plans, if you're trying to understand how do you rebuild your knowledge of your markets in Latin America ahead of you know, in the post-COVID session, we can provide you some guidance, and we're offering a 30-minute consultation for free. That if you answer this poll and tell us you're interested in that consultation, we will collect the answers. We know who answers what question, and we'll reach out to you in the next couple of days to set that up. So again, if you need help in how you're going to design your building of your knowledge, your research, if you're looking for guidance on specific markets or on specific launches of products and things like that, we're happy to give you our 2 cents at no charge. So please go ahead and fill out that poll, and we will follow up accordingly in the next couple of days. I'll give you 20 seconds to do that before we move on. Okay, Abel, I think we've come to our last panel, which I believe you're going to moderate.
That's correct. That's correct. We're going to talk a little bit about the political fallout with COVID, and we have a couple of questions there that are pertinent, because obviously we've seen some issues very much recently in the news in Colombia and other countries where there have been a lot of issues with this. And so to address that, one of the first questions we want to ask the panel is focused on this area, and one of them is going to be about the fiscal crisis itself. How big of a fiscal crisis is Latin America dealing with right now, and how does it compare historically to other crises that have occurred in the past?
Great. So I believe Arthur is going to join this panel as well with myself, but let me begin by talking about the fiscal situation. Since the start of COVID, in spite of the fact, or probably in part because of the fact that central banks felt they had more weaponry to defend their economies, they encouraged, first of all, interest rates to remain low, and governments were encouraged to go out and spend to try to keep their health sector stocked, as well as provide money to the most vulnerable. As a result, we are in a fiscal crisis across Latin America, some countries more than others. There have been more than 20 sovereign debt downgrades across Latin America, some countries suffering more than one downgrade. Why is that important? Well, with each downgrade, the cost of issuing debt going forward becomes more expensive. And so as these countries build a fiscal hole for themselves, they're going to need to issue debt to pay it off or roll over their debt obligations, and that becomes more costly. So government's in this tight spot between, on the one hand, there's a social crisis with so many people slipping into poverty that needs addressing and is costly to address. And on the other hand, a lending community who, although they gave a free pass to everybody last year, is now demanding a show of more fiscal austerity going forward. So we have not seen this kind of fiscal crisis in Latin America since the 1980s. That's how significant it is. But the region is far better positioned to deal with it. And the global monetary environment is a lot more open and liberal to help deal with it than certainly what we confronted in the 80s. But there's no question there's political tension going forward, and there's going to be some really tough governing choices going forward.
Well, given these strained budgets, how's that going to affect the development of clean energy in Latin America?
Yeah, very, very good points, John. In terms of clean energy, it's going to force governments to increasingly focus on private sector. LatAm actually does receive a higher share of clean energy investments from private funds when you compare it to some other emerging and developing markets. It actually received 40% of the private clean energy funds in the past 10 years among all emerging and developing economies. So that's larger than India, Southeast Asia, and the Middle East and North Africa. So to get this private investment that it's still missing, it's going to need investor-friendly regulatory frameworks. It's going to need business-friendly policies because investors need to have some guarantees that their contracts are going to be upheld, that they're going to get pretty substantial returns on their investments if they're going to shy away from Latin America and look at other more safe and attractive emerging economies. So within the region, countries such as Chile, Brazil should fare relatively well, while some countries with more political and regulatory instability like Argentina, Venezuela, Ecuador, and even to an extent Mexico nowadays are going to be some quote unquote losers in this private clean energy investment.
All right. Thank you so much, Arthur. Well, another thing that this brings to mind in terms of the fallout from a political standpoint with the COVID crisis, could this affect mining? And John, you being the director of our mining practice, can you explain a little bit if mining projects could be affected by this COVID fallout and the fiscal crisis?
Sure. I mean, governments around the world, not just in Latin America, but particularly in Latin America, are looking not only to cut costs, but there are limits to how much they can cut costs, as we've seen with the attempted tax reform in Colombia. They're also looking to tax successful industries. So e-commerce may become a target for greater taxation. Certain export sectors, which are booming right now in Latin America, might be targeted. And the favorite target, the political football par excellence, is the mining sector. And everyone's familiar with the history of mining in Latin America and the baggage that brings. But the fact is that silver and gold prices are at very high levels, as are copper, and zinc's at a decent level as well. So these are some of the leading minerals that are extracted in Latin America. And for the political class, as well as for voters, this seems an obvious target to raise taxation. That becomes more complicated these days because a lot of these agreements between mining companies and governments are protected by international arbitration agreements. And also the taxation in some jurisdictions, in some projects, is variable, such that it goes up when prices are high and comes down when prices are low. So, but we're seeing this very much the case in Peru right now. The Castile has promised to tax mining at a greater level. And in fact, on July 6th, in our next mining coffee chat at 11 a.m., we will be talking about Peru again. We were there 3 months ago. And I've posted a link there so you can sign up for that. But we're seeing this as an issue in Chile. This could be an issue in the Colombian election, depending on who becomes president there. There's a couple of anti-mining candidates, certainly at large. And it will probably be an issue in Ecuador, even though it's elected a pro-business Lasso president. Nonetheless, mining is one of the few areas that's enjoying increased foreign investment in Ecuador and may very well be targeted as well. So this is definitely a concern for miners, not just in Latin America, but around the world, and something we're monitoring closely.
Thank you so much, John. And as you can see in the group chat, if you took a look there, John shared a link that it was about Peru. For our mining practice, we have something that is called coffee chats, which are periodic their meetings, sort of like a webinar on Zoom, where we have folks from the industry get together to just talk about pertinent topics. So the one that he was sharing had to do with Peru. So you might be able to also talk about some of these other topics with royalties as well in that particular one, and learn a little bit about the climate in that and in that sense, and also about other future mining topics as well. I think this kind of wraps us up for this portion of the discussion and brings us to the Q&A section. So we want to take a look at a couple of the questions posed by the audience and try to answer those if we can with the time that we have left, even though we've kind of run over, but let's see what we can do here. One of them is with regard to Guyana. So the question here that comes from Daniel is, do you think that Guyana has the potential to become the region's leading oil and gas producer in the next 10 years?
Yeah, I can take that, Bill. Thank you. Good question, Daniel. I don't realistically think Guyana can pass Brazil. Brazil's scale with its pre-salt reserves is pumping about 2.9 billion barrels per day. Mexico potentially, if the estimates that some of the analysts are predicting come to fruition and more findings keep coming online. So it really depends on how successful the explorations are in Guyana. So far, so good, especially in the Starbuck block, 19 successful oil wells. So it could, if everything goes right, surpass Mexico and become the second largest producer in Latin America, but I don't see it passing Brazil. But in any case, the size of Guyana, it's 800,000 people per capita. The revenues that will come from the oil sector will make it the richest country in the world. So this is huge for its size and scale. But in terms of overall size, I don't think it passes Brazil in the next 10 years.
All right. Thank you so much, Arthur. Let's take a look at a couple other questions that have come in here that may be relevant. This is going to be a little bit more with regard to other areas that we've covered here, like logistics. One of them is, how are logistics companies reacting to the changes in demand from the customers in 2021?
Thank you, Abel. What we have seen in Latin America is logistics operators are focusing on strengthening their digitization strategies to meet the new expectations and demands of a more connected customer in need of greater access to information. That is something that, again, is a remark that I did during my presentation. But a good example of that is, for instance, airlines are exploring the frontier of digital transactions for cargo services to strengthen a financial lifeline while the pandemic continues to suppress passenger revenue. We're seeing a return to normality in markets in the US, in Europe, but in Latin America, cargo has become a tremendous source of revenue for airlines. And how freight forwarders and airlines are able to accommodate the increasing demand by offering real-time bookings. It's a transformation that we were calling for in the logistics industry, but it wasn't happening. So again, the investment in technology, in logistics IT solutions, and especially for the sellers of those IT solutions in the US, in Europe, looking to expand their presence in Latin America, I guess this is the perfect timing to exploring that, because companies are paying more attention to their technological capabilities and how they can improve their operations to better serve customers, to gain market share, and to also reduce cost. So that's something that is happening now, and it will likely continue and improve in the next couple of months.
All right. Thank you so much, Diego. There's a good question from Norman that has to do with a sector which is hit very hard by COVID, of course, and it's about tourism. And so he's basically asking us if do we have any comments or thoughts on the recovery of the tourism sector?
Sure, I'll take a shot at that. There's definitely green shoots of recovering tourism in a couple of areas. First of all, the The highest growth tourism right now in Latin America is vaccine tourism. Wealthy Mexicans, Colombians, Venezuelans, Peruvians, Brazilians, Argentines flying to the United States to get their vaccines. Some are flying to Chile to get vaccines. And I think that this, although it doesn't necessarily benefit Latin America, it's certainly benefiting Miami. It's benefiting Houston, it's benefiting San Diego, Las Vegas, etc. You've got record flight prices. I believe Mexico City, Houston is now $1,000 a return because of the vaccine traffic. Another, of course, is domestic tourism. So in Mexico, for instance, which did not have as severe lockdowns as places like Argentina and Chile, where you actually were restricted to the sub-region where you lived. In Mexico, domestic tourism is doing very well. If any of you have been to the tourism destinations in Mexico, instead of hordes of foreigners, it's hordes of Chilangos and people from Guadalajara and Monterrey. So domestic tourism in Mexico and Brazil has certainly done well. And the Caribbean, which obviously relies on tourism a lot more than most of Latin America, several markets have opened up. So the Dominicans have been very aggressive at opening up tourism, and they've been growing pretty steadily over the last 8 months, and really softened their restrictions. The English-speaking Caribbean countries have generally been more restrictive, surprisingly so. This is partly an island nation mentality that you see around the world, from Taiwan to Japan to England to Cuba to Trinidad and Tobago. So it's quite common. And you know, international travel, tourism, people crossing borders, particularly if they're going from countries like the United States, where most of those who can afford to travel and are of adult age are now vaccinated. They want to go to Latin America, but they're generally fearful of it because they hear still deluges of negative news. Now, Mexico is beginning to make inroads with the American market, but I think South America still struggles to attract international tourists, even if they've lifted restrictions. Countries like Colombia have lifted restrictions, but they're struggling to get that tourism dollar. Now, for most of South America, tourism is not a high priority industry. Tourism as a percentage of GDP in most South American countries is woefully low. So it doesn't have the kind of political sway that other industries have had. And so I think that international tourism, cross-border tourism into South America will be the slowest to recover.
All right. Thank you so much, John. Here's a question that I think might be better suited for Lindsay, given her presentation. What payment methods are driving e-commerce growth, and will cash for e-commerce continue to be relevant?
Thanks, Abel. That is the question of the day. I get that almost on a daily basis. Look, every payment method is growing with 30% growth year over year. Everything is expanding. Credit card, the real question is, are alternative payments and cash payments continuing to grow vis-a-vis credit card? We see that overall projected growth for credit card remains a leader. This is because more people are getting issued a credit card thanks to the push of neobanks and easier issuing of credit cards. And as e-commerce customers become more sophisticated, using a credit card is the go-to payment method to access installments, purchasing with credit, etc. Now, other payment methods are also growing. So, for example, bank transfers and Pix, particularly in Brazil, we're experiencing an entire revolution around real-time bank transfer payments for P2P, in-store payments, and e-commerce. And many of the big hard-hitter players in e-commerce are accepting Pix for payments. So we've already seen Pix surpass Boleto payments in Brazil, which are a cash-based voucher that you can pay either online through online banking or in cash at a bank. So we do expect some of these up-and-coming bank account-based payment methods to displace cash even in e-commerce. But in countries like Mexico, Peru, or even Argentina, where cash is still very important, cash will still represent around 10% of e-commerce volume and is the only option available to people who are still outside of the digital services ecosystem. So we can't forget about cash just yet. And I would say, credit will continue to be the number one payment method, with accelerating growth also coming from some alternative options.
All right, thank you so much, Lindsay. On the healthcare front, we have a question from an anonymous attendee that asks us if we expect the change in the government in Peru to lead to changes in public healthcare spending.
The short answer is a tentative yes. The president-elect has declared that he wants to focus on education and healthcare as part of his campaign promises. I think in the immediate future, it's going to be a question about confirming the new political landscape. And by the time his government gets in office, it may take a little while before we see any changes, but that's certainly the direction we expect it to go.
All righty. Thank you so much, Christoph. Now we have switching gears over to logistics. This one is from Boris. So Boris is asking us, what do you think of the sky high container rates from Asia to the west coast of LatAm, which I guess he's saying can be above $10,000 US dollars for 40-foot containers. His question is, will this have any impact on small and medium companies and other types of importers?
Yes, Boris, is having a tremendous impact on importers, especially on restocking inventories. SMEs and companies in Latin America, in countries like Colombia, Chile, are facing shortages. And as I discussed before, there has been a booming demand from customers that continue to work from home, that their revenues were not affected by COVID. And they were, as in the US, they were buying and replacing some of their home appliances. And we're seeing how, for instance, importers of household appliances have been experiencing shortages. They have demand that they're not able to accommodate, and also they're passing through those higher costs to consumers. And that is creating also inflationary pressures in Latin America. In countries like Colombia, also because of the protest that we're seeing, the ports are congested with cargo that is not able to being distributed to the urban centers, and also the high prices that we're seeing for ocean cargo is definitely putting some businesses, especially the SMEs, out of business. So that's the concrete impact that we're seeing as a result of these sky high rates.
Now, that's certainly a challenge for those small and medium enterprises then. This one is related to logistics, but it also straddles healthcare. So I'm not sure if this would be better for Diego or for Christoph to take on. This one basically is asking us what supply chain bottlenecks might affect sales of medical devices moving forward.
Moving forward, okay. What Christoph mentioned in terms of the shortages that small hospitals in rural areas are facing right now, it's because first, logistics companies and logistics operators are overstretched in their operations, especially in the big cities, and their main target is serving their biggest customers, and the small hospitals are the ones left behind. And also the global bottlenecks that the sector has been experienced over the last 18 months regarding shortages of medical equipment, PPE. Despite it has improved in 2021, we're still seeing that manufacturers and sellers are basically going with the best and with the highest bidder. And in that case, some of the Latin American buyers are being left out of the negotiation. And that is something that will continue over the next 12 months, definitely. We will continue to see the whiplash effect in the supply chain of pharmaceuticals, of medical devices. And Latin America is in the worst position now because the governments basically are experiencing a fiscal gap that have those resources, have less resources available to support the public sector. So in those two areas, I see the greatest challenges in the logistics and supply chain.
And I'll just add to that something that you mentioned earlier, Diego, about the customs delays that are quite common across the region certainly doesn't help. And the last thought is that in some countries, including, for instance, in Colombia, there we have noticed that there is an opportunity for local manufacturers of certain types of devices and medical supplies to gain some market share at the expense of imported products. And in part, it's because they can rely on their own distribution channels locally. But we're still waiting to see how much of an impact that'll make nationally and regionally. But it is a trend that we've started to detect.
All righty. Thank you so much, Christoph. Well, let's see here. We have run over probably like 20 minutes or so past our original ending time. So we're going to probably have to wrap this up. So to do that, there's a few things here. First of all, you can see here the contact information for some of our presenters if you want to speak to them. We're going to be sending you a PDF of this particular presentation as well as the video of today's webinar within the next 24 to 72 hours or so. And of course, we also shared links to some of the resources like an upcoming webinar and our megatrends analysis, which is a free analysis that's available. So what we'd like to do is when we send out the resources for this webinar, we'll also include some of those other links as well. That'll give you some further information. And then, of course, when you have the contact information of the presenters, you can also follow up as well. And those of you, of course, who signed up for a consultation will definitely be in touch with you as far as that's concerned. So I think that covers pretty much all the ground that we can cover for today. And we're going to let you get on with the rest of your day. And we're going to get on with the rest of ours. Thank you so much for joining us. And we hope that in the future, you can join us for future webinars. Have a great day.